From the MrTopStep offices newsroom in Chicago, this is Danny Riley with MrTopStep and a very special guest, Tom Malone from TTTHedge.com. Welcome to Chicago, Tom.
Thank you, Danny. Really
You got it.
to be here.
You know, Tom and I have actually been, as Tom mentioned a little while ago, we've been talking for about 6 years, and this is our first meeting. Tom's been around. He's got a room of his own. He's been a trader for how many years, Tom?
About 30 years now.
About 30 years. So he's got his badges to show, and what we're going to do is we're going to do a quick interview. And first thing I want to ask you, Tom, is, you know, what have you been up to? What have you been doing?
Well, we've got a little room. Actually, we just limited to about 25, 30 traders. They're pretty active traders, mostly in the ES futures. And we've really been active in this market the last 10 years.
Right.
And we try to get as much information out that the professionals use down to mom and pop at home, more or less. So we've got a mix of professional traders and people just trying to get into the market.
Sure. And you, Tom, you actually keep track of all your trades, percentage wins and percentage losses, and you keep track of that on a daily basis.
Absolutely. I think that's the best way. I think people want to see a profit and loss type atmosphere, and I think the best way to show it is transparency. And once you have transparency and you have honesty and truth, it brings the integrity of the trade home to the folks.
I agree. You know, Tom, listen, there's been a lot of talk about the Fed and the taper, and this actually started back in late July, late June, early July, and the S&P came down, and then the S&P came roaring back up. And I guess my main question for you, Tom, is, you know, how do you perceive what the Fed's up to right now and their taper process? When are they going to start? As you know, you just left the floor of the CME, and the S&P's got another brand new contract high overnight. I think it got up to 1809 quarter. And when Tom and I were walking off, the S&P was about 1804 even last. But what's your view on the taper?
I think it's stunning to a lot of people. As a matter of fact, in the last 6 months, I was one of the most bullish people last year. I think at your round table, and I was at around 1,700 plus, and people were thinking at the time that's crazy, and here we are at 1,800 plus. And to be quite honest, there's a couple times in the last 2 months where my jaw's been kind of on the floor. Is where exactly is the selling? There is no selling.
No.
Volume's dried up. Again, our AD line has kind of fallen apart, even though price has ticked up to all-time highs. So we do have kind of a divergence, but every little pullback that we've had, there's been heavy buying underneath that keeps the market up. So you have to, like our good friend Marty Zweig, you can't fight the tape and you can't fight the Fed. The Fed's never been stronger.
No, you're 100% right about that. You cannot fight the Fed. Well, you know, so you called out 1,700 earlier this year. So obviously the S&P has exceeded your expectations. Do you expect it to continue going higher?
It's really hard to say, but and again we're looking at dumb money versus smart money. It's kind of derogatory to say, but actually dumb money's been kicking butt this year. Hedge funds are only up 4 or 5%. Bond people are only up 4 or 5%, or even taking losses. And dumb money, the people, mom and pop, or speculative traders, really not much mom and pop out there, but speculative traders that have just gone into options long and futures long have been the big winners, and those have traditionally been contrary indicators.
Right.
So again, it's been an opposite market where the smart money hedge fund type people are getting really hammered, and the people that are willing to take a bet just on QE, saying I'm never going to stop, are making the big money.
Yeah, they surely are. And I talked to Marty Schwartz about this last week, and you know what he feels is that, and he's a great stock picker, and this whole rally has left him in the dust. Now he's been doing good on other stuff, but. You know, it's obvious with the S&P up over almost 27% that, you know, as we go higher, what I kind of see is the volume continuing to narrow. But obviously, the rally's had a big, you know, it's been a big rally for both the small investor and the big investor. But I'm just wondering how many people are really on it.
Absolutely, and when you see volumes at midday trickle down to absolutely nothing, and you see these high frequency trades push up the market
Right.
20 handles in a
Right.
blowback session, and then nothing happened after that. You have to be suspicious and you have to be worried, because again, it's easy, as we always talk about, trading other people's money.
Sure.
But when it comes down to your own cash, I can see why Marty got in trouble, or not probably in trouble with his cash position or whatever. But a lot of big traders have missed the
Right.
last 20, 30, 40, 50 handles. And is it worth chasing? Like, again, bring up Dr. Martin's wife. He says, leave the top 1 to 2% to the other guy,
Yeah.
and get out. Is this the time to get out? I mean, you look at seasonals now, they're so strong into 2014, but also
Yeah.
you're looking at the government possibly shutting down again by March. Who knows? You know that there's going to be a correction.
Oh, yeah.
But is it going to be a 3% to 5% correction like we just got done with? And also in this last big rally, individual stocks really haven't participated. The Russell stayed at about the same level all through November, where the headlines with Maria and CNBC
Sure.
and everything else like that, where indices make new highs every single day. But the average stock really wasn't doing that good. So if you're sitting at home with 4 or 7 stocks long,
Right.
and you're looking at the end of the month saying, what the heck, the Dow Jones is breaking a new record, but my portfolio is down 1.5%.
Right.
That's the big divergence that I think that people are kind of leery about, and why they think that there's a bubble out
Sure. And I think they also rotate out of the winners.
there.
They
Exactly. this
rotate
time of
back
year.
and forth.
Yeah.
Well, where do we go from here, Tom?
Well, the big question is, does seasonality and the performance anxiety into 2014 just keep us continue to grind up to 1850 or so?
Right, right.
And then once the government starts to get involved and we start talking about government shutdowns and breakdowns and things like that, Europe still isn't out of a mess. China with their new policies and things like that, you have to look at it at a worldwide perspective. What's 2014 going to bring? Everybody obviously right now is looking at, my goodness, we missed 2013, is 2014 another 30% up year? We've been in this business a long time.
Yeah, we have.
How hard is it going to be to maintain this momentum with sentiment at this frothy of a period?
Right.
I think that there's got to be, we haven't had a 10% correction in 26 months.
Wow.
26 months of no 10% correction, and 10% correction, as you know, are very bullish for the
Yeah,
market.
yeah.
It creates cash, and we haven't had one for 26 months. And that's why I say you can almost put an asterisk on this bull market because of the steroids of QE3.
Yeah.
And will that 85 billion last forever? I personally cannot see how it can last through the spring, but momentum has its way of making us wrong at tops.
Yeah, I personally think once they start pulling, the markets are going to start going down. How much they come down? I mean, we're up, 27% as we talked about
Right.
in the S&P. So, once you do start to get that 10% correction, that'll probably be your next special.
Right.
But last but not least, Tom, I know that you're a big sediment guy, and can you tell me where we are on sediment right now?
Right, and again, as far as extremes, we have, again, hit short-term extremes several times in the past 6 to 7 months. And these extremes come back, and in a very quick time, we get that 1 to 3% correction, and everybody thinks it's a top. So the sentiment doesn't get as bad as other tops, the 87 top, the 99 top, the
Right.
2003 top, the 2007 top. So we're still not as frothy as we expect, or as speculative as what we have been in the past.
Sure.
But I assume that the next big rally, if we do have a small correction into January, I assume the next rally after that will be probably the one before a 10% correction. So I'm
Right.
thinking up to 1850 and then down 10 to 15%
Right.
in the spring, and then right back into a bull market. I think this is a lot like 80 to 83, where you could actually have a 5 to 7 year really strong bull market, and then a small cyclical bear,
Right.
and then back onto the bull for another 5 or 6 years.
Yeah.
So I think it's going to provide traders a pretty great time, because we will have volatility pick back up, and again, we will ultimately, all bulls have that speculative where mom and pop do, when we were
Sure.
talking about cocktail napkins and
Sure.
the taxi driver giving
Right,
us
right.
giving us a tip. We will have that moment, I think, sometime in the next 3 or 4 years, and that'll be it for this secular bull
Yeah.
market.
Well, I agree, Tom, and I also agree with what you said, that there could be one last push here, either at the end of the year or the beginning of the year, and then you probably got to start to look to take some profits. And actually, I've heard a lot of guys say that they thought that there'd be some kind of pullback in late December. We haven't seen any of that, and that, you know, there could be a little bit of a pullback going into December. I'm under the impression that the S&P could keep going right up into the end of December, and maybe in the final few days of the year we'll get some profit taking. But anyways, listen, we want to thank you again for coming in.
Thank you so much,
You got
Danny.
it so much, Tom.
Big
You got
pleasure.
it.